Welcome back. You're watching Investor's Guide on ET Now. Thank you for staying with us. Virendra Kumar is with us as well. It's time for our product review. And this week, we're looking at the ICICI Prudential Dynamic Fund. Avan is here to give us an introduction. Avan.
Thanks for that, Faye. Well, the fund in focus this week is the ICICI Prudential Dynamic Fund. Now, there's a reason why our fund is called Dynamic. The fund has the flexibility to invest across large, mid, and small cap stocks without any restrictions. It also has the flexibility to take cash calls as high as 35% of the portfolio, which safeguards its capital from erosion during the downturns. The ICICI Prudential Dynamic Fund is just the fund to have in your portfolio if you want to tide out the choppy markets relatively unscathed. The strategy, however, can be a dampener if the markets were to make a sudden turnaround and move upwards, like in 2007 when the fund underperformed its category. Apart from that, the period the fund had a stellar track record, giving its investors an annualized return of 26% every year since its launch. Let's do some math to give you a better perspective. If you invested 1,000 rupees in this fund when it launched, you would have 10,950 rupees today. Though the fund has not performed well in the recent past and has fallen a notch below its 5-star rating, should that be a reason for you to worry? Let's find out. With that, it's back to you, Faye.
Thanks, Avan. Virendra, the ICICI Prudential Dynamic Fund, like Avan was telling us, has a very impressive long-term record. You gave this fund 5 stars in October last year. Now, since then, we've had a very, very volatile market. How would you rate this fund's ability to manage that volatility?
It remains an impressive fund, and it has all the, flexibility. Though of late, it is going to be a dominantly an equity fund, but it has the flexibility to move into fixed income. And also, it can change colors with time. It's not a very rigid fund, and it has managed it very well. Its value orientation has paid off very well in the past 4 or 5 years, but that is something which will change over time. One concern which I have about this fund is configured not to perform in a roaring market, as it happened in 2007. That's the only year in its life when this fund struggled to beat its benchmark. Because of its orientation, because of its portfolio orientation, if we get many years, few years of a good bull phase, which can't be ruled out, then this fund could be relatively disappointing. But on the whole, this fund has always, generally been able to guard its position in the second quartile on an annual basis, which is very impressive. And on a 3 or 5 year basis, this fund really comes out very strongly. So, I would recommend this fund as a core holding and a decent performer.
Well, Virendra, give us your rating on the ICICI Prudential Dynamic Fund. You did give it 5 stars in October last year. Where would you place it now?
I will give it a 4 star because, it has slipped little bit on relative performance. But it remains a fairly impressive fund.
ICICI Prudential Dynamic there being downgraded on Investor's Guide from 5 stars to 4 stars. But Virendra says it remains a very impressive fund, so there's no need to panic if you're invested in that fund right now. Of course, on this show, we're going to keep a very close eye on that fund and we'll tell you how it's doing on a regular basis. It's time to move on to our hold or sell segment. The 34-year-old Sudeep Menezes has written in. He wants to build a retirement corpus by the time he's 50, and he wants to know if he should continue investing in the portfolio he has right now. Top of his list, Virendra, DSC BlackRock Top 100 Equity. Continue that investment?
Given that, yes, it's an impressive large cap fund, and if I have to choose 4 or 5 large cap fund, it will figure there.
Well, the next on his list is HDFC Top 200, Virendra. Does it figure among your list of 4 or 5 funds given its performance of late?
No, the performance has slipped. It has not been as impressive, but I would still feel that, somebody on a long-term investment plan, it should be part of it.
ICICI Prudential Dynamic, 3,000 rupees every month. You just gave it 4 stars. Continue that investment?
Yes, continue that investment as well.
Reliance Equity Opportunities is the next on his list, Virendra, along with Reliance Growth. Of the two, would you recommend he continues investing in both?
No, I would say that Reliance Growth should be dropped from the portfolio, even it's simply based on its, relatively poor performance. And Reliance Equity Opportunity remains an impressive fund.
UTI MNC is the next on his list. He's putting 5,000 rupees in this fund, which gives it a higher allocation than almost everything else in his portfolio. Continue that investment?
Yes, UTI MNC doesn't figure in any of our categories, but it's a very impressive fund. By its design, the MNC and the dominance of companies there, it turns out to be little healthcare and FMCG tilted portfolio. So in that sense, it's a thematic fund, a very old fund which has done very well in recent times, at least over the past 4 or 5 years. So it's an impressive fund, nothing to worry. But I don't think it's the finest choice. I would say that a UTI opportunity will be a kind of a fund, will be a superior diversification and equally well performing choice than a UTI MNC.
Last on his list is the DSP BlackRock Balanced Fund. There's a balanced fund figure in this portfolio, given that we're talking about at least 20 years here?
Yeah, given the time frame, I don't think there's a role of a balanced fund. And also I feel that most investors, they have their EPF contribution or a PPF contribution or their captive, most people's first choice is a bank deposit for their emergency fund. So I think, I'm not looking at a fixed income allocation here or his overall allocation, but thinking of all this portfolio as a long-term portfolio where he's accumulating savings for retirement, he can do without a balanced fund.
All right, so there you have it. Your portfolio is on your screen. Virendra has looked at it personally and told you what to hold on to and what to sell. Virendra, we have a question from Vinita who's written in. She invested 5,000 rupees in the UTI Infrastructure Advantage Fund in 2008. She wants to know if she should stay invested or is there another fund you would recommend for her at this point?
No, I think, we have suggested before and I would suggest now that give up on the infrastructure fund and generally give up on any sector or a thematic fund if you have only, and if that is the only fund that you own. So for that reason, get out of this. I think you have done you have waited for too long and there's superior alternative. When choosing a fund, you have, or investing in equity, I think there are 2-3 things in your mind which should be the essential checklist, which is you are in a diversified vehicle, you are investing regularly, and ensuring that it is your long-term money. You are unlikely to need that money for 5-7 years. And so the third, and most of these things are very easy to validate. So I would say that get out of the UTI infrastructure, maybe consider UTI opportunity.
All right, we hope that helps. We have time for one last very quick question. Soma Sundaram has written in, put together 50,000 rupees for his contingency fund and he wants to know, should he invest it in the SBI Dynamic Bond Fund or the Kotak Gilt Investment PF Trust? Of the two, which one would you recommend for a contingency fund, Virendra?
I would say that, don't consider the Gilt Fund. Even there, the same principles apply that diversify and be in a flexible vehicle, so be in the Dynamic Fund.
He also has 50,000 rupees that he'd like to put away for the next 6 months. Virendra, Morgan Stanley short-term fund is the one he's eyeing right now. Is that the best option for him?
That's a reasonable choice, but if I have to choose 2-3 which looks very impressive, I would say the IDFC or the UTI short-term bond fund.
All right, Soma, remember you can write back to us if you need any more help. Virendra, thank you so much for joining us on the show and answering all of those questions. If you have a question for Virendra, write to us. Email ID is at the bottom of your screen. Coming up after the break, we'll find out if investing 25,000 rupees a month can build a corpus of 1 crore rupees to buy a home. Don't go anywhere.